Good afternoon, everyone. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you today on this Tuesday edition of the Weekly Wrap-Up. Graham, what can you tell us about the markets from last week?
Yeah, absolutely. Thank you, Stacy, and thanks for all our listeners. I hope everyone had a great Memorial weekend. Yeah, pretty volatile week last week, really led by technology. The buzzword AI, right, really took center stage last week. We did see some enthusiasm tampered down a bit by some stronger economic numbers, maybe a little bit stronger inflation. So the rate hike possibility is maybe back on the table. But if we look at the indices in their respective areas, the NASDAQ advanced really about 2.5%. The S&P was up about 0.3%. The Russell was pretty flat. Now, if we look at the S&P in their sectors, 8 of the 11 S&P sectors actually lost ground and were down. Interesting, because we have roughly about 7 stocks generating about 90% of the S&P's return year to date. And I think we all know what area that is, technology, right? We saw some steeper losses in defense areas, maybe some concerns over the debt ceiling, budget talks, so on and so forth. But again, we saw technology up as a sector about 4.5%, led by NVIDIA, AI, blockbuster earnings and expectations really propelled that stock in that market. Crude oil managed a small gain in the U.S. dollar as recent strength continued as the U.S. Treasury yields climbed a bit. Core PCE reading rose about 0.4 month over month and about 4.7% year over year. But again, higher inflation, consumer spending still was above forecast for the month. And again, I think that's taken some general enthusiasm off the market, but not away from tech right now. June rate hike stood about 68%. So the odds of about 68%. Minutes from the FOMC meeting indicated some pretty significant uncertainty about policy in the direction of maybe a slight slant to increasing as long as we continue to see strong economic numbers. U.S. GDP growth for Q1 was revised up 1.3% from 1.1%. So definitely not a recession. That seems to be what everyone's talking about. May, manufacturing remained in contraction. New home sales increased about 4.1% in April, while pending home sales flattened out a bit due to limited inventory, maybe some higher rates, so on and so forth. So we're seeing in the housing market, really the new home sales moving up, but existing homes coming onto the market, not, because everyone's got those low rates, right? Why give up those low rates to pay higher ones? Internationally, we saw Germany's economy enter a technical recession. If we look at Chinese market or the Chinese economy, probably still going to have to be pretty dovish in the terms of wanting to keep rates down, incentivizing spending to try to get that economy up and moving a bit more. If we think about Japan, further stoked pressures to modify their ultra-loose monetary policy, seeing reasonable inflation, but again, they're kind of status quo in what they're doing.
Okay. Well, Graham, you
Yep.
mentioned AI, and
Yep.
all eyes are on AI. Do you think that's going to continue to rally, or do you think that, it has long legs or just a little blip on the screen?
I definitely don't think it's a blip on the screen, right? And it's a nice little blip on the screen. We get a reversion to the mean. Tech really underperformed last year. Tech's outperforming this year. Value is outperformed last year. Value is underperforming this year. You always get a reversion in the mean. They tend to come back together at some point. We're expecting that. We're seeing a very narrow market right now. As I mentioned before, 7 stocks in the S&P, because that's a cap-weighted index, are driving 90+% of the returns. Maybe 100% might be with 9 odd. So I think we all know it's not a broad market right now. Even an equal weighted S&P that's not adjusted for cap size, is down a couple percent this year. So it's a very few names, a very small, important sector, but a sector that's kind of driving everything with the NASDAQ and the S&P. So I don't think it's a blip, but it doesn't mean we might not have a period that it's going to digest and then you'll have the underperforming, maybe the value areas start to play catch up.
Okay. Well, thank you so much for that,
You
Graham.
got it.
And thank you to our viewers for joining us today. We'd like to see you again tomorrow. Can you join us for our monthly Lunch and Learn? It's going to be at noon tomorrow, and we've got a really interesting topic this month. We've had some viewers asking a lot of questions over the past few weeks, and what we've decided to do is dedicate this time to answering some of those hot topics and hot questions that you all have for us. And so we hope to see you tomorrow for that. And just a reminder that in just over 2 weeks, we have our 4th annual car show. It's going to be right here in our office, and we've already been getting some good RSVPs, and it looks like we're going to have a great turnout for that show. We'd love to see you join us as well. So please check out our website, stay posted on our social media posts, and learn all the latest and greatest of what we have going on here at the office. Thanks so much for joining us, and we look forward to seeing you tomorrow and again next week. Take care.